We've got the world's biggest retailer and an automotive stock that appears to be impervious to bad news. Investor Beat starts now. Thanks for watching. I'm Chris Hill. The Dow hovering around break-even for most of the trading day, and it would have been worse if not for Cisco Systems. The tech giant reported surprisingly good earnings. Joining me in studio today, Matt Argersinger and Charlie Travers. Guys, we'll get back to Cisco in just a minute, but let's start with another Dow stock, Wal-Mart. First quarter earnings were in line with expectations, but same-store sales fell 1.4%, and shares were down on the news. The world's largest retailer also lowered guidance for the second quarter. What do you think of this, Charlie?
Well, there's some real reasons behind this, Chris, and also it seems like a little soft ones. The payroll tax going back up to where it used to be, that's going to affect all retailers. It's something we worried about coming into the year. The delay of getting income tax refunds also hurts our customers, and then you get the CEO's favorite whipping boy blaming the weather. So Walmart went through a phase where it had 8 consecutive quarters of same-store sales declines. We thought they put that behind them, but here we are, and they're back struggling in the U.S. again. But they are taking market share. I think this is, in the long run, a very well-run business. Their little neighborhood market stores are doing quite well. So I think you just stay the course here with Walmart.
Matt, we talk about retailers like Costco and Amazon and Target. Walmart is bigger than all of them combined.
No, it's huge. I mean, 470-odd billion in annual sales. And we have to remember, we talk a lot about how much we like Amazon and how we think kind of that's more the future of retailing. But Walmart's sales are like 7 times Amazon. And we can talk about maybe 1% or 2% growth in same-store sales, but those are huge numbers for Walmart. And they still have a lot of room to grow overseas as well. So.
And you look at the stock performance over the last 1, 2, 5 years, it's beating the market. Is it still a good value?
I think so, Chris. You're still paying only about a 15 times earnings multiple for this stock for one of the best retailers in the world.
All right, let's get to some of the day's movers and shakers. Tesla Motors is raising $830 million through a stock and debt offering. While shareholder dilution usually leads to a stock falling, Tesla is clearly not the usual stock. What is going on here, Matt?
I don't know. It's Teflon Motors, maybe not Tesla anymore, but usually right. Company comes out and says they're going to issue stock and raise debt. It's usually a sign to sell the stock, but I think it's actually a good move by Tesla. They're doing it at a great time. The stock is at an all-time high. Great capital allocation move. They're going to raise capital they need to pay back the government for one. And by the way, Elon Musk is buying $100 million, part in the secondary and later on. So that's a huge vote of confidence, especially with the stock at an all-time high and an $11 billion market cap. So pretty positive. I'd say if you have a long enough time horizon, you can hold on to Tesla here.
All right, Kohl's first quarter profit fell 4.5%, and same-store sales were down as well, but shares of the retailer were up as results were still better than expected. This has really been a roller coaster stock over the last year, and most of that ride has been down.
It has been, Chris, but in the long run, I'm a big fan of Kohl's. I think this is an exceptionally well-run retailer, a notoriously tough industry, and what worked for them was holding the line on expenses and keeping their pricing power. They didn't have to mark down a whole lot of inventory, which led profit margins to come in stronger than the market was expecting.
Dow component Cisco Systems first quarter profits came in higher than expected. Shares of the networking giant hitting a 2-year high. Do you like it at this price?
I kind of do. Cisco's done a great job of allocating capital in the past. They bought back shares at lower prices. Dividend yield is around 3% even after today's gain. And Cisco's reporting some pretty good results. I mean, if you looked at Juniper's results or IBM's results earlier, you're kind of expecting Cisco to report pretty bad numbers. They came in pretty solid. Growth in the U.S. looks pretty good. Emerging markets look strong. It's not a bad investment right now.
Nothing like low expectations.
Right.
And finally, chip maker AMD down big after a Goldman Sachs analyst downgraded the stock from neutral to sell. Year to date, it had been up around 70%. What do you make of this one?
Yeah, AMD stock has really been on fire the last 6 months. They're getting their chip into the new PlayStation 4. Rumors are they're going to be in the new Xbox as well. But that said, the PC market is in decline, and that's a big headwind for them to deal with.
Competing with Intel, also kind of a headwind.
Yes, as well.
All right, that's going to do it for Thursday. Let's look ahead to Friday. Matt, what's the stock you've got in your radar?
Big Lorry Holdings, ticker BH. They report earnings tomorrow. This is a stock a lot of investors probably don't know about, but it's run by a guy named Sardar Biglari. He invests in a lot of restaurant companies, owns 20% of Cracker Barrel, for example, also the owner of Steak 'n Shake, a popular Midwest burger chain. Really good investor, really good capital allocator. There's a lot of salt that you need to take with this one, but I think it's one of my largest holdings, and I'm interested to see what the results are tomorrow.
All right, Charlie, what about you?
This one's as much personal as investing. It's Microsoft. Next Tuesday, we get to see what the new Xbox is going to be. There hasn't been a new Xbox on the market since 2005. It's been a long time coming. I'm very excited as a gamer, and I love the stock right here as well.
It's safe to say you'll be first in line?
I'd write them a check right now for a pre-order if I could.
All right, for Matt Argersinger and Charlie Travers, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interests in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.